It's Monday, December the 23rd, and I'm David Song, currency analyst with Daily FX, here to cover some key data prints that we should be watching going into the Christmas holiday. So namely, we're expecting to see a nice rebound in U.S. durable goods. Current market forecast calls for a 2.0% print. We're also expecting a nice rebound in non-defense capital goods orders, excluding aircrafts, a good proxy for future business investments. So guys, in light of the recent taper that we got from the Federal Reserve, we did also get some comments today from Mr. Jeffrey Lacker. He won't be a voting member until 2015, but with the 10 billion taper that we got, he really laid it out that will be sort of the benchmark that we'll have to gauge future Fed interest rate decisions on, especially if we're going to see them continue to embark on their exit strategy. So we'll keep a lot of these things in the back of our minds as we head into the end of the year, but in terms of market reaction, could be very limited as we have market participation really turning lower ahead of the holiday. So we'll see what we get in terms of the data itself. But again, guys, with the market reaction, maybe this data could do more in terms of the future policy outlook, the fundamental outlook, rather than price action that we could trade off tomorrow. So with that said, guys, a few things I think we're going to need to watch with the U.S. durable goods report. So today we got personal spending, which did increase 0.5% in November. And when we take a look back at the third quarter, the final print for third quarter GDP, we saw a nice upper revision in personal consumption as well. So it could bode well for U.S. durable goods tomorrow. So we'll see how the data print pans out. But for the most part, I like to watch the euro dollar for U.S. related event risk. So let's just jump into the euro dollar right now. I think it's a very interesting setup that we're watching as we still have that bullish channel dating all the way back to November, still taking shape. I think it was very constructive that we saw the euro dollar close above trendline support last week and now trading higher from there. However, few things to watch here. When we take a look at the RSI, the relative strength index was also maintaining this nice bullish momentum here, but looks as though it might have broken down. A little bit cautious on that break. But guys, when we take a look at what's happening a little bit deeper into the charts here, so I want to scroll down to the 4-hour chart, and I still think that we could see the euro dollar coil up for another move towards that 138 figure because I was watching this sort of bearish divergence, if you will, start taking shape on the 4-hour. Never really panned out, never really started to take shape. So given this topside break that we're seeing in the oscillator, could be very suggestive that we're going to get another move to maybe 138 before we get a larger correction going on. So these are some of the price levels that I'll keep a close eye on going forward. But for the most part, technical aspect still remains more bullish than bearish in my eyes. So with that in mind, guys, and as I mentioned before, thin market conditions could produce a lot of choppy whipsaw like price action. So again, be prudent through these coming days. But as always, guys, good luck on your trades, and I will speak to you soon.